Hi everyone, welcome back to my channel. So in today's video, I'll be discussing the foundational principles of how to trade supply and demand. So I'll start with just breaking down the simple definitions of each. I'll then provide some visual examples on how they relate to support and resistance. And I'll end the video with showing y'all my analysis on how to evaluate common trading setups in specific zones of overbought and oversold areas. So let's just go ahead and dive right into it. So first things first, I have Google and AMD pulled up here on the chart, and I'll explain why in just a second. But I want to just go ahead and start with understanding supply and demand. So for those who may be beginners or new traders, just to give a simple definition, supply is basically going to be found at price levels where selling pressure is historically strong. And supply refers to sellers entering the market, creating a barrier of resistance. This is typically seen before price reversals or consolidations. And then opposite to that is demand. This is found at price levels where buying pressure is historically strong. Demand represents buyers entering the market, creating support levels. And this is often observed before price surges or sustained uptrends. So identifying supply and demand zones where price behavior dictates market sentiment is essentially going to involve price rising when demand exceeds supply and price falling when supply exceeds demand. So real quick, I know me just saying that doesn't give you a clear definition, so let me go ahead and jump into an illustration of this, and then we'll hop right back into Thinkorswim. Alright, so when considering supply and demand, the primary takeaways are that supply zones account for the price levels where sellers are likely to enter the market, and because of that, there's likely resistance levels that have been reached that prevents the stock price from rising further because of the selling momentum. Now, on the other hand, demand zones account for the price levels where buyers are opting to enter the market because the support level may be maxed out for the time being, of course, preventing the stock price from falling any further due to the buying pressure. Okay, so in order to help everyone remember this, I just want to share with y'all what I used when I first started trading. So SSR and SDS are acronyms that help me remember how to identify supply and demand. Now, in reference to supply zones, these are the areas that can indicate overbought conditions. And in regards to demand zones, these are the areas that can indicate oversold conditions. So I came up with SSR for supply and SDS for demand. SSR is the sell-off caused by the supply of resistance. SDS is the surge caused by the demand of support. So to put this plainly, when there's an increased level of supply, the stock price is relatively high, and therefore it's at an overbought status, thus causing a sell-off to follow. And the opposite is also true. When there's a high level of demand, the stock price is relatively low, and that places it in an oversold position, causing a surge of the price to follow. And I'm telling y'all, once you get familiar with how to spot these zones, you can easily prepare for either a breakout or a reversal, especially if the stock retraces a key level. And I'll show y'all some examples of this in just a second. So I'm hoping that this makes sense so far, but let's go ahead and hop back into Thinkorswim so that I can elaborate more on the examples for reference. Okay, so now that we have a pretty clear picture of what this representation looks like, I want to discuss support and resistance in more detail as it relates to the relationship between zones and key levels. So the question then becomes, how do you identify these zones on the chart? Now for me, the answer is pretty practical. I just look for sharp price movements indicating an imbalance, and I use candlestick patterns like engulfing candles or pin bars. And then of course, I also relay this to supply zones, which are going to be those resistance areas. And these are going to be places where the price struggles to break upward. And then transversely, of course, I'm analyzing demand zones, and these are going to be support areas where price struggles to break downward, simply because the level may have fallen too low. Now, when support breaks, it can become resistance, and the opposite is also true. When resistance breaks, it can become a level of support. So utilizing price action to observe how price reacts at different key zones to project trends is essentially how you would go about doing this. But to provide even more detail, let's just go ahead and look at some examples of trading strategies with supply and demand and of course trend reversals. So we can see here on Google that on February 7th, there was a decline within the stock price, at least in the early morning. And then of course in the early afternoon, we see that the stock actually rose back up. We saw a little brief consolidation period, and then the stock essentially fell into a downtrend to end the day. Now, if we fast forward to February 10th, on the other hand, we can see that the stock actually fell into a downtrend briefly and then rallied up to an uptrend. We saw a little bit of a decline throughout the morning as well. And then, of course, ultimately, the stock kind of consolidated for the remainder of the day. So let me go ahead and zoom in so we can get a better picture of each of these trading days. And we can also get some understanding of how supply and demand essentially functions. Now, the easiest way to explain this is that you want to enter trades near supply zones in downtrends or demand zones in uptrends. And for breakouts, you want to wait for confirmation when a price breaks a zone to determine trend continuation. And there'll also be zone retests. And basically what this means is that you want to trade when the price revisits a supply or demand zone for high probability setups. So let's look here. I always want to make sure I chart for the high and the low no matter what time frame I'm on. And in this case, I'm on the 5-minute. So we can see that the low is going to be 185.10. So I'm going to chart for that level. And then from here, I'm also looking at key levels where I see the stock has either priced upwards, downwards, or to the side that has repeatedly touched over and over again. So it's almost like having reactions to certain zones or certain levels. So we can see that here with these two candlesticks. So I'm going to go ahead and chart for this 188. Now this may not look like much because again, I'm going to zoom it in so you guys can see this on a micro level. But again, you want to start with the macro level looking at a couple days, or if you want to have it on a higher time frame, you can look back from the daily, but I'll do that when I get to AMD in just a second. But to continue on, I'm also going to look for any other areas of retracements, looking for places where the stock has actually shown reactions at certain levels. So again, I would look at this level here at this 187.78. I would also look at this level here at this 186. And then I would also come to this level right here at 188.62. So now depending on what your strategy is and what you're looking to do as far as your projections, you may decide to say that that's enough levels to chart for example purposes, and just to keep the video not being too long, I'm going to go ahead and be satisfied with that. So let me go ahead and zoom in each day so you guys can see the breakdown for this. All right, so as mentioned, on February 7th, we see that Google actually started the trading day in a downtrend. And the stock fell as low as, looks like 187.98 at the low at about 9 a.m. And then we saw the candle immediately thereafter was actually bullish, and it rose back up to about 189. Now, why is this important? This is important simply because you want to make sure you see areas where the stock has either respected or rejected key levels that follow throughout the trading day. So if we move forward, we can see that the stock actually consolidated for a brief moment. We saw then a slight dip, it rose back up, and then we saw this extremely bearish candle here. And at the time being, this was the lowest price level for the day. Hence why I went ahead and charted for it, because you can see that the candlestick actually fell to the lowest at about 186. However, this actual support level eventually turned into resistance, because if we move forward, we can see here that once it broke below this level that second go round, the stock continued into a downtrend, but we can see that the candles did not reach above this 186 level. Although it was brief, this did serve as a level of resistance. And then moving forward throughout the trading day, we saw it reach the all-time low for the day at the 185, hence reaching this ultimate level of demand for the day. Now, as mentioned, when there's a high level of demand, what's soon to follow is actually a rally to the upside, simply because the stock has been oversold. Now, once the stock reached its peak from that actual rally up, we see it was touching on this price level at 188. And again, this was actually once a support level. When we look at this candle in these two in this zone here, it was once a support level at about 9 o'clock, 9:05. It definitely broke below just slightly, but again, it still served as a level that was respected for the most part. So once this level of support actually turned into resistance, we can see here that the price actually broke into a downtrend. Very brief, however, it still was a downtrend. And then from here, it just pretty much consolidated for the remainder of the day. Now this 185.10, this level here, is serving as a good demand zone, signaling a reversal to the upside. One, because we see this doji here at 1120, and then of course we saw those red candles actually had very small bodies to follow, so these bearish candles were very small. And then we see that the next candle was this actual bullish candle with a very strong body, which would have given a good clue, or at least a significant confirmation that the stock would actually rally to the upside. So I hope that makes sense. So again, I'm mentioning all of this to show you how supply and demand essentially works, and it's always going to be a setup that you can utilize over and over. So let's go ahead and just move on to February 10th. I'm going to go ahead and scroll the chart over so we can go to the next trading day right here. Okay, so let me bring this down just a little bit. All right, so we can see here on February 10th that the stock actually fell into a downtrend to start the morning. There was some buying pressure here at about 8:40, but ultimately we see that sellers took over once again, and then of course the buyers stepped in at this level. You guys can see the wick, the bottom shadow on this particular candle here at 8:55 is fairly long. It actually almost touched this level of the 187.78. Again, that's going to create that level of support, and hence being another demand zone. So as mentioned, once there's a high level of demand, what's typical to follow is a price surge to the upside. And we can see that here with this particular set of candles, these two right here to the upside. Now this candle here at 9:05 actually almost reached this level of the 190.03, and this served as a level of resistance, aka the barrier or the ceiling to the actual price level. And this area is also known as a supply zone. Now the candles to follow were a bit choppy, but we can see ultimately that what happened after this supply zone was reached and it didn't cap out above, that the stock went into a downtrend, consolidated a brief more, and then fell into a further downtrend. Now this candle here at 11:20 almost touched this 187.78 once again. And as y'all can pretty much pick up on, the pattern is continuing, that this is touching again on the same demand zone. This level was respected, and of course we saw the stock actually rise back up into a brief uptrend, and then the stock traded sideways for the remainder of the day, but we do see that it respected this 188.62 as a level of resistance. So again, y'all, I hope this is all making sense. Because as I've mentioned so many times before, the stock market is all about patterns, and it's really just continuations of what's already happened, just replaying itself repetitively. All right, so let's go ahead and move on to the right side of the screen. I have AMD pulled up. Now I have AMD pulled up on the daily so that y'all can see the difference and also the similarities between the fact that supply and demand are going to be universal no matter the time frame. So regardless if you're on a shorter time frame like the 5 minute, 2 minute, whatever it may be, or if you're on a higher time frame like the daily, 4 hour, 1 week, 1 month, supply and demand will still dictate how the stock price moves. Okay, so once again, I'm going to go ahead and start by charting for the price levels at the high and the low. So we'll look at this 227.30, and we also see the 106.50 here. Try to get it as close as possible. Let's do like right there. Now from here, we're just looking for repeated areas where the price has shown those reactions once again. So we can look at this area here at about 132. We also see this area here at 174. We can also look at the candles touching here, this level at about 187. I see this level here at about 149. And just for the sake of time, we'll just stop there so that I'm not charting a million different price levels. But I think y'all pretty much catch the drift of what I'm doing and how this works. So let me just go ahead and zoom in real quick just so I can show y'all a couple examples of how this works as well. Okay, so starting from left to right, we can see here that this demand zone was a little bit choppy, but of course it still followed the rules in the sense of being this demand zone. Of course, we see some candles that broke below it, but for the most part, it did respect this level at this 149 as a barrier of support. And we can see that following this, the stock went into a brief uptrend. It then traded sideways in this consolidation zone, fell into a slight downtrend, consolidated once again, and then rallied up to break this level of resistance at this 174 to create a new level of resistance at 187.45. And then of course, this was going to be a high level of supply. Now, because this level of supply was so high, it wasn't sustainable. And what that means is simply that what goes up must come down. And we can see that this remained true because the stock fell into a deep downtrend to ultimately reach this level of demand down here at about 121. And immediately thereafter, the buyers actually stepped in and they overpowered those sellers, and then the stock rose back up. The selling pressure then took over and the stock actually fell down. And then buyers stepped in once again, pushing the price back to the upside. Now, this range in time also presents an actual chart pattern. Can y'all kind of tell what it is? If not, I'll just go ahead and tell y'all it's a double bottom. Not the perfect look of a double bottom, but it still is essentially that. Let me kind of show y'all what that looks like. Let me pull this up really quick here. So from here to here, and then here to here, here to there, and then here, all the way up. You guys can see it formed this capital letter W, aka a double bottom. Now, because these types of formations usually happen, it's pretty easy to see where the stock will go as far as the projected next move, especially when you can understand how supply and demand works on a fundamental level. Now, I know many of my subscribers like for me to pinpoint the tools I use for analysis. Essentially, y'all want to know what my technical indicators are. I do use the RSI, of course, the MACD, even the stochastic, simply because y'all know it's an oscillator for overbought or oversold areas. But y'all already know what I'm going to say. Y'all have heard me say this many times before. I really prefer using the ADX. And of course, the ADX just tells you how strong the trend really is. So I guess there's really no need for me to kind of like play. Y'all already know what I'm about to do. I'm going to pull it up just so y'all can see what I mean by this. Hit apply and okay. Now remember, the ADX is the average directional index, and this just measures the strength of a trend, whether it's bullish or bearish. It really doesn't matter. The ADX will tell you how powerful or weak a trend truly is. And of course, I've showed y'all before that the ADX ranges from 0 to 100. And anything in the range from 0 to 25, it signifies a weak trend or a sideways market where there's not much momentum. And then anything in the range of 25 to 50, this is going to show you it's a strong trend, whether it's going up or down. It doesn't matter either way. And in the range of 50 to 75, this is a very strong trend, and it presents potential for big moves. And then last but not least, that range from like 75 to 100, this is an extremely strong trend, usually unsustainable in the long term. So if you see anything in this range, just know it'll likely be short-lived because it's excessively high. But to show y'all how I use the ADX, we're going to go ahead and take a look at this example here with Google. We can see here at, again, about 840, 845, we see that the actual stock price supported a decent amount of volume, and we can see the ADX was pretty high. And then if we look forward to about 855, we can see that this bullish candle here is actually showing the ADX was at about still in that range of 30. And then it kind of decreased a little bit. We can see that here, but we can see that we're still in this 25 to 30 range. Therefore, it's signifying a pretty strong trend. Hence why these three candles, these bullish candles here, were so strong and the body of them was so long as well. Now, along with that, of course, it's important to analyze the volume. So high volume at specific zones often signal stronger reversals or continuations. And we can see that here because the volume actually increased from the previous 10 to 15 minutes of volume. And if you were to compare this with any type of candlestick patterns for reversals like a doji or a hammer, this can confirm your supply and demand strength as well. So that's why it's so important to tie everything together. Oh, real quick, and another key point of emphasis is that gaps in the market are closely tied to supply and demand dynamics, specifically for like earnings reports. It could be anything from like news events that can create temporary influxes. But when a price gap forms, it could either be up or down as well. So price gaps in the market are also going to be indicative of supply and demand, because whether it's up or down, it can indicate a significant shift in the market sentiment. And all this means is that there can be a sudden imbalance between buyers and sellers. So if the market opens with a gap, it suggests that there was a strong demand in the case of the gap up, or excess supply in the case of a gap down. And remember, y'all, I made a call out on Coinbase a little bit earlier this year based on my analysis of a gap fill, and I posted it here on YouTube. So if you check the community tab, you'll see it's still up. Yeah, and you guys can always go back and analyze that to see exactly my analysis on it. Actually, let me just go ahead and pull it up so y'all can, let me show y'all real quick. Give me 1 second. Let me show y'all what it looked like. Let me pull it up on the daily. Let's go here. And I'm going to zoom it in, get it zoomed in a little more. Let me move it over. About there is good. Okay. So when I was analyzing this specific setup, I was looking at this gap right here between November 8th and November 11th. Now we can see that the stock fulfilled this gap here on these 2 days of the 13th, the 14th, well, actually 3 days, and the 15th. And as time continued, we can see that this actual top level of the gap served as a level of support. And then eventually the stock fell back into this level of the gap here on the 18th, also the 19th, and then it broke below it on the 20th. And it actually fell as low as about 250.62, at least below this level. So maybe like 247, 246 we can see here. And then it slightly rose back up to about this 265 range, 270 range as well. Now for me, when I knew I was going to make this call out to everyone, the focus was on two key price levels that were determining the next move for me. So let me zoom it in just a little bit more so y'all can see what I mean by this. So we can see that this particular candle here actually closed right above the actual gap itself, the end of the gap. And that was my reasoning for saying that if the stock actually broke above this 279.27, it opened up the potential for the gap to be filled to the upside. But if it actually broke below this 250.62 here, bearish sentiment comes into play and it could have actually dropped to the next target to the downside. Now this trade played out perfectly because we can see that the stock rose into the gap nearly to perfection to the 296. It almost touched it completely. And again, that's just with me understanding supply and demand. So when I analyzed this on this larger time frame and I saw that there was confirmation with the volume bars, and then I also saw that this candle closed right below this gap at the bottom of the fill, I knew it had to be either one of two things that were going to take place. Either this gap was going to be filled completely to the upside, or it would fall below and go ahead and drop into a further downtrend due to increased selling pressure. But on this specific day, buyers were actually more dominant, so it actually rallied to the upside, almost completely filling this gap. But yeah, y'all, that's just me giving a quick little side note. But anyways, just to kind of explain this, as the price moves towards filling a gap, it's essentially a market correction where the price seeks to return to a level where supply and demand can balance out. Now, traders often watch for these gaps to close as they reflect areas where the market may revisit to stabilize, as mentioned. And it just creates opportunities for potential entry or exit points based on the prevailing supply and demand conditions. So I hope that makes sense. All right, so now in reference to overbought and oversold areas as it relates to supply and demand, I do want to spend just a brief moment speaking on this because overbought areas are indicative of market prices being excessively high due to strong demand, and this often occurs near a supply zone. Now, the typical indicator to use for this is, of course, going to be the RSI, so I'll pull that up here. I'm going to actually take off the 80X, and there we go. So just keep in mind, if the RSI is at, near, or above 70, this is also going to show you that it's a supply zone because these overbought areas are extremely high. Now in reverse, oversold areas are indications of market prices being excessively low due to strong selling pressure, and this often occurs near those demand zones. So if the RSI is in the range of about 30 or below, this is showing you that it's oversold. So if you remember nothing else from this video, just remember that overbought conditions may lead to pullbacks or reversals, and then oversold conditions often trigger buying opportunities. Now, I don't want to fail to mention that when you're trading supply and demand, a general guide to protect your portfolio is to place a stop loss order slightly beyond identified zones to manage your risks. So in case the trade goes against you, you can actually cap out right above or below where it reversed on you. Also, make sure your position sizing makes sense as well. And y'all hear me say it all the time, so just be sure to wait for confirmation signals before entering trades just to avoid false breakouts. And this also helps you avoid chasing the trade as well. So just do your best to be patient. Oh yeah, and real quick, someone asked me the other day how I keep my trades consistent, and it reminded me of how I used to overcomplicate everything. But trading doesn't have to feel overwhelming, especially when you have the right strategy. And let me just say this, you don't have to master a million different trading strategies to be successful. You can pick one or maybe even a few that work best for you, and you can just stick to those. There's nothing wrong with trading the same setups over and over. If it works, it works. So don't feel pressure to change your trading strategy because it's all about doing what works for you and what you're comfortable with. And if you don't feel the need to adjust it or change anything, then hey, just keep making your money. And y'all, the video is pretty much over, but I do want to say this again. This is probably like a little side note. I had no idea that I'd help so many people hit their first 1,000 week in trading. It's really wild seeing y'all wins roll in because y'all will send me messages and like DMs. Again, I'm going off on a tangent, it has nothing to do with the video, but I just appreciate the fact that y'all actually reach out to me and y'all say, hey, you helped me do this, this, and this, or this setup made sense once you explained it. Even someone said they have my videos in their community for people. Like, y'all, thank y'all so much for that. It's really just all love, y'all. I so appreciate it. So I'm super humbled by it all. And I'm glad y'all are getting value of not only the content here on YouTube, but the one-on-one sessions as well. I'm glad that these strategies that I'm talking about actually are working for y'all, just because they are effective. So yeah, I'm just super happy for y'all. That's just my little sidebar. I'm glad y'all are making money. And again, seeing so many people make thousands of dollars, like I can't be more grateful for that. But yeah, so hopefully this framework provides a solid foundation for understanding supply and demand dynamics. And then also analyzing market conditions and making more strategic trades. But yeah, y'all, that'll pretty much do it for this video. If you found this information to be helpful, feel free to leave a comment down below. I thank y'all so much for watching. And of course, I'll see y'all in my next one.